If you're someone who doesn't believe in buying and selling shares frequently and want to invest in some good quality companies for the long run, in short, you are a passive investor, then this video is for you. So in this video, I am going to show you what are some of the key features that you should look for in a company before you can call it a long-term investment. So without wasting any further time, let me quickly share my mind map and you will understand what are those key things. So number one, the company under consideration should have some moat with it. Now what is called a moat? So a moat is nothing but a competition's inability to steal business. So you are running a business and next day suppose a competition comes up. Now how easy or difficult it is for the competition to steal your business, to take your market share determines your moat quality. So if it is very difficult for any other competition to enter into your business and take your market share, then it means that you have a very strong moat. However, you are doing a business where it is very easy for a competitor to come anytime and take away your market share. It means that you are not having any sustainable competitive advantage or in short moat. Okay, so when you want to invest in the long term, you should always check for the presence of moat, what kind of moat this company has. Now when it comes to moats, there are 5 categories of moats that I am going to discuss today with you. Let us see what are these kind of moats. So number one moat is brand. So if a company is having a brand in its specific niche or sector, it acts as a deterrent for any other competitor. For example, Tata and Apple, right? So you know that Apple is market leader in the smartphones, right? Similarly, Tata is also market leader into various other segments, right? And if any competition wants to give challenge to these companies, it is not very easy. That competition will have to shell out a lot more money to take market share from these companies. So having a brand acts as a very strong moat, acts as a very strong deterrent against any competitor. So check if the company under consideration is having a brand or not. It can be a big brand or a low brand, but then it should be having a brand recall value. People should understand it. People should remember it. Next moat is network effect. What is network effect? Network effect basically means if one customer buys product of this company, looking at that customer, other customers also start buying product. So it is like a fire in the jungle. That's called network effect. Again, let us see what are the examples. So Facebook and Apple again. So if your friend has bought Apple not as a fruit, but yeah, as a Apple iPhone or iPad, and you saw that, definitely you would also be tempted to buy that. So that is what network effect. Similarly, if your friend is on Facebook, if your colleagues, your batchmates, your friends, your neighborhood is on Facebook, they are interacting with each other, but you are not on Facebook, you will feel missed out. So you will also be willing to come to the Facebook platform. So that is again network effect, right? So I hope that gave you clarity on what is a network effect. Now let's move on to the third mode. Third mode is high switch over cost. What it means is, if a company product is designed in such a way that it is difficult for the customers to switch to a competitor, right? That is called high switch over cost. Let us take some example. SBI, State Bank of India. So for example, if you have a current account in State Bank of India, or let us say even savings account, and now you want to change your bank. In that case, you will have to update your banking information to all your vendors, suppliers, employers, everywhere, wherever that you have shared the banking information, you have to share that same information again, right? And this process is cumbersome, it is tedious, right? If people have not changed the banking information in their system, they you may not get the amount in your right amount. You may not get the right amount in your bank, right? So you will most likely try to avoid switching the bank to avoid this inconvenience. So that is called high switch over cost. So whenever the company has products which displays this quality of high switch over cost, it is a very good moat for that company. Okay. So we have covered brand, network effect and high switch over cost. Now we will see fourth mode, which is advantage of scale. Now what is advantage of scale? It means that the company is able to produce large quantities of its products in a very short span of time. So it enjoys the advantage of scale. Some examples: Intel, which is into designing the chips, manufacturing the chips used into different electronic components like computers, laptop, right? And Amazon. So if you remember, Amazon also launches Great Indian Festival and few other shopping festival days for few days in a year, where lakhs and lakhs of customers buy Amazon products in a very short span of time. In order to do all this, it needs to create a huge infrastructure which Amazon already possesses. It is very easy for Amazon to scale as much as possible in a very short span of time. And if a competitor tries to come and tries to beat Amazon or Intel, it will be very difficult for that competition to enjoy this advantage of scale. Okay, so advantage of scale is another mode which company enjoys and it protects from the competition. And now let's check last but not the least, low cost advantage. It means that if a company is able to take raw materials or the input products at such a low price that no other competitor can match it, it is called low cost advantage. For example, DMart, Starbucks, Walmart, right? So all these companies, they purchase raw materials at a dirt cheap prices because they buy in such a huge quantity, in such bulk, which is not possible for any small player to purchase in that bulk. And because of this huge purchasing power, they are able to enjoy the pricing power. And because of this pricing power, they can market their products at a very cheap rate. Correct? So low cost advantage is a huge advantage when it comes to protecting the business from the competition. So with this, I have covered 5 different modes: brand, network effect, high switchover cost, advantage of scale, and low cost advantage. Now this is just the starting. It is not that if a company has these modes, any one of these modes or all of these modes, it is guaranteed that it's a long term investment. It's not that. It is just the start, but it's a good start. Okay, chances are very high that this company will be good if it has one or more of these modes. Now there is one more thing which you need to take care of, is you need to see the profitability of the company. Okay, so if you are looking at some long term investment, you don't want to do buy and sell frequently and you are more of a passive investor, then look for companies who have consistent track record of profitability. Because if they have been profitable in past on a consistent basis, the chances are very high that they will remain profitable in future also. But if a company has never made profit in the past, chances are lesser compared to any other consistent company to make profit in future. Correct? Because what lies in future nobody knows. But at least looking at the past, we can get some idea. So if a company has never made any profit, we cannot be very confident of its making profit in the future. So if you don't want that kind of hassle, if you don't want to land up in those situations where you uh, could not figure out whether this company will make profit or not, it's better to stick to those companies which have been profitable in past and which are consistently showing good track record. That's all. Okay. So with this, I have covered what all I wanted to cover in this video. I just planned two things: modes and profitability. And as I said, this is just the beginning. It is not the end of your research, but this will give you a good direction on how to find out companies which are good long-term investment. This will be a good starting point. So I hope this video was useful to you. If you found it useful, please type your learnings in the comment box below and share it with your friends and subscribe to this channel. So thanks for watching. Take care.